Wall Street started Tuesday with the major indexes heading south, but right now they're right near the break-even line. All this coming just one day before the Fed comes out with its big interest rate decision. For more on the Fed, a little preview, let's go to the floor of the New York Stock Exchange, where we're joined by Peter Cardillo. He's chief market economist at Spartan Capital Securities. So Peter, the markets are anticipating a cut of about 25 basis points. That is a quarter percentage point. What are you looking for the Fed to announce tomorrow?
Basically, a quarter percent drop. I don't see them doing anything more than that. In fact, I think their communique might be a little bit more on the hawkish side rather than the dovish side. I say that because, you know, there's a lot of evidence out there that the economy is probably growing around 2%. In fact, we saw industrial production snap back this month from last month. It was up 0.6%. I should say month of August rather. And, you know, that is good news.
So, Peter, does the economy
sales,
really need it?
No, I don't think the economy needs a cut. I think they're doing it just to take precautionary measures and to calm the markets. And, you know, just, 10 days ago, 12 days ago, we were looking at an inverted yield curve, which was suggesting that recession in early 2020 was a possibility. And now the bond market has dialed that back. You look at the 10-year note, we were trading a little bit of 1.8% last week. Now we're down to 1.8, and that decline was probably due to the attack in Saudi Arabia.
So, Peter, using Fed Chair Jerome Powell's words, do you think the Fed's going to keep to this being a mid-cycle adjustment, or are we in for this part of a series of rate cuts?
No, I think it's a mid-cycle adjustment. And I think that we're probably headed for some sort of cosmetic trade deal. I think we're getting very close to perhaps maybe the latest tariffs that are supposed to go into effect in the middle of October are probably going to be dropped. And there's a good possibility that maybe some of the existing tariffs might be dropped. And that means some sort of a cosmetic deal. That's what I'm talking about in terms of cosmetic. I don't think we're headed for a long-term trade deal solution. That could probably carry well into next year. But if we get some sort of relief, that would be a big psychological lift to the markets. And I think it would help even ease the pain in the global market.
Well, Peter, what would you need to hear Fed Chair Powell say tomorrow in his commentary to keep this uptrend, equities uptrend, intact?
I think we need to hear that the economy is in good shape. I think we need to hear that there's no real need for interest rates to come down. That would be the key. If interest rates come down, that only means that there's fear among the Fed members that we're headed for a real slowdown and possible recession. So I think they need to talk a good game, a game that's actually reality.
All right, Peter, that's all the time we have. Thanks a lot for your thoughts on the Fed.
My pleasure.
Coming tomorrow. Our thanks to Peter Cardillo of Spartan Capital Securities, coming to us from the floor of the NYSE. I'm Fred Katayama, and this is Reuters.